Well, distinguished guests, ladies and gentlemen, good afternoon and welcome to the ABI premises. And we are very pleased to host today the first energy-efficient mortgage initiative sponsored by the European Mortgage Federation. I wish to thank you, the international delegation, the speakers, and all the guests that came to Rome to listen, exchange ideas, create synergies on these topics. And I will take this opportunity also to give a special thank to the promoter, Luca Bertalò, the Secretary General of the European Mortgage Federation, who, along with his colleagues, went through great efforts to launch this very important project to which the Associazione Bancaria Italiana, the Italian Banking Association, is providing full support and collaboration. I would also like to congratulate Luca for the 5th anniversary celebration of the European Mortgage Federation in the very same year that we celebrate the 60th anniversary of the Treaty of Rome, as Luca has just reminded us now. Well, let me focus on why banks may be an important player to move on the COP21 project. Banks have a key role to play in financing major economic, social, or environmental policy shifts, given their unique position to facilitate the capital flow in the lending, investment, or advisory role, as well as financing innovative technologies essential for accelerating the developments. The European banking sector, and today I'm also representing the European Banking Federation, recognize the importance of tackling climate changes and is committed to support the EU policy makers as well as their customers in delivering on the objective of COP21 to accelerate the transition to a low-emissions economy. While banks have already taken major steps to reduce their impact on the environment stemming from their own activities and investments, their main contribution lies in providing financial solutions for environmentally sound projects and companies, also viable from an economic and financial perspective, as both perspectives are equally important. Several banks have set ambitious objectives of multiplying their exposure to renewable energy sectors and decreasing exposures to carbon-related industries. Many have integrated climate-related considerations in their investment and lending decisions. Banks are also exploring the use of digital technology as a lever for green finance in lending and investments. Many banks offer a wide range of environmentally friendly products and services with a focus on quality and innovation that also improve sustainability. Activities support and finance renewable energies, energy saving and environmental protection with measures for all public and private customer segments, retail customers, SMEs, large companies, public administration, startups, third sector, and major projects in their own nation and abroad. Considering retail segment, banks disburse retail loans for environmental purposes. These loans were, for among others, the energy efficiency renovation of property, the purchase of ecological equipment and installation of solar and photovoltaic panels, and this EMF-ECBC initiative focuses on green mortgages as one of the most effective levers banks can use in this field. Banks are also direct investors in funds that commit own risk capital to the environment, infrastructure, and energy sectors to promote the social economic development of local areas. Most recently, several banks have started to issue green revolving credit facilities where the margins are linked to the sustainability performance of the borrower. This creates an additional economic incentive for the borrowers to improve sustainability. Among the most effective proposals, in my opinion, specific considerations deserve those concerning the implementation in the current review of the risk reduction package of a green supporting factor, which would consist in lower capital charges for assets, loans invested in the green sector, or the support by guarantee funds that loans to support by guarantee funds loans to small green projects that could, and also by a definition of standard contracts. The public sector could speed up the development of performance guarantees, especially in the energy efficiency market. So let me conclude by providing you with some figures about the real estate market in Italy. Luca has already provided some figures that demonstrate why the environmental issues are so important for us. And these figures will help us to understand why we think the green mortgages may have a bright future here in Italy. The stock of Italian properties could represent an important training ground by starting to analyze loan data, for example, aimed at the remodeling our many historic buildings and post-Second World War construction that undoubtedly need to improve their energy efficiency. Today, the real estate market in Italy is recovering at a significant pace, with 18.99 rebound recorded in 2016. The Italian housing market has posted increases for 3 consecutive years, reaching 434,000 homes purchased. The total sales value grew from 76 to 89 billion, and the number of homes purchased with a mortgage also increased about 27%. Data on the composition of wealth in Italian households show that real estate investments represent a dominant share. The residential housing market is particularly relevant because a house is one of the most important assets that families have or would like to have. Luckily, in Italy, more than 80% of families live in an owned or usufruct dwelling versus 73% in the United Kingdom, 65% in France, 56% in Germany. And also because over these past few years, some important events have occurred in the housing market. We all know how the great crisis of the third millennium started essentially in the real estate market. So it is our great desire that the demand for mortgages increase in coming quarters, both from a qualitative and quantitative viewpoint, and even considering the desirable, predictable, and expected consolidation of the economic recovery in Italy. So in this context, even the stock of loans for home purchases, which starting in October of last year, has returned to positive territory and should continue to grow at progressively more perceptible pace. So in this context, an initiative aimed at promoting the green mortgage places itself right in the wake of a twofold objective: quantitative, so increasing the stock of mortgages and sales, and qualitative, stimulating demand for green buildings. So having said that, I will stop here, and I wish you a very fruitful workshop, and I thank again you for the attention. Thank you.